Hello friends of the VisionCrypto channel. My name is Arian and my channel is all about crypto and chart analysis, explained as simply as possible. I wish you all a great year 2025, both personally and professionally, and of course, when the bull run ends this year, I hope you all make a lot of profits. Algorand remains a mystery box, with potential for performance or risk of sell-off. Let's examine the long-term and short-term charts to assess Algorand's current status. Right now, Algorand is rising just in time for the new year, but first, let's take a look at the long-term chart, and then we'll also look at the short-term chart to see how things are currently standing with Algorand. The long-term chart raises a few questions. Since our last bear market low, which was during the last bull run, Algorand has developed well and reached a price of 2.54. Then the next bear market came, and that's where the problem starts. Because we've established a new all-time low, and for a classic impulse movement, we need a 5-part upward movement. For that, there are support lines and areas that must not be broken. And for Algorand, that would have been around 2.01. If we stretch it a bit, it would be the area between 151 and 130 where Algorand should not have broken down. You can also see that it managed to hold in that area for a while, but ultimately it broke downwards. This means that the classic 5-part upward movement we need is unfortunately no longer in place. You can also see that it managed to hold in that area for a while, but ultimately it broke downwards. The recent rise is a 3-part wave, A, B, and C. Wave B is the sell-off. Now we're in wave C, targeting 224 to 543. That's why I can currently only count this upward movement from the last bull run as a 3-part movement in a wave A, B, and C. This means we have a larger wave A, and this strong sell-off would be wave B. And now we're moving back up into wave C, where the price target could be between 2.24 and possibly up to 543. This is now the bullish interpretation that I can see very clearly on the chart. Unfortunately, there is also a bearish interpretation, and I have been talking about that for a long time. And the thing is, during the last bull run, a top was formed. And from a bearish perspective, we've established a wave 1, which means that now, looking at it bearishly, we're making a short-term move into wave 2. Once we complete this wave 2, it will drop steeply again in wave 3, followed by wave 4 and wave 5. That would obviously be very simple for all Algorand holders. I have to say that I also own Algorand, and I'm keeping a close eye on the price because it would be really bad if this bearish count plays out, leaving you stuck with your Algorand and having to wait a long time, with a loss for the price to possibly recover. I know that in my last video about Algorand, there were some critical voices regarding what applications Algorand has and that it will become a major player in the future. However, in this chart analysis, it plays a rather minor role for me. I'm going to tell you what to pay attention to and how you can tell whether the price is going up or down. However, in this chart analysis, it plays a rather minor role for me. I'm going to tell you what to pay attention to and how you can tell whether the price is going up or down. Of course, I would be happy for everyone, including myself, if we can make this count happen and maybe even reach that 540 peak. No question about it. Here, the point to pay attention to is that we shouldn't be caught off guard by an early sell-off. The thing is, for this bearish interpretation, we have this red price target where the price would move from about 0.47 to around 123. The bearish wave 2 target is reached with a brief dip. This sell-off might be entering wave 3. A smaller ABC formation targets 5.30, possibly extending over $80. This means that theoretically this sell-off would already come in wave 3 On the other hand, we also have a smaller ABC formation here, which we are currently expanding, and the price target is at least a price of 35 US dollars, but can also extend to a price of just over $80. That means this is the price range we would reach for a direct sale. And as long as we stay below this, I'm paying more attention to the sell-off scenario to get a good selling price. In 2021, we should get above this Fibonacci level, meaning above 0.81, as I've marked. That would mean the probabilities change, and then I'll shift my focus to rising prices to see if we can actually reach that level up there. Before we move on to the short-term chart, I want to quickly make a recommendation, or rather, I want to get something off my chest that is important to me. In 2021, I often say in my videos that you shouldn't just have one exchange, but several, and that's the case for me too. I have another exchange besides CoinEx, EU regulated. They contacted me to say that because of rules starting January 1st, it's no longer allowed to stake Algorand. On the evening of December 31st, my Algorand was taken out of staking. That's the downside of exchanges that are EU regulated. You just get cut off. It's no longer allowed to stake Algorand, and on the evening of December 31st, my Algorand was taken out of staking. That's the disadvantage of stock exchanges that are regulated by the EU. You're simply restricted and some things are no longer possible. If you're not into that and want an exchange that isn't EU regulated, definitely check out CoinEx. I've been working with them for a year and a half now, and I'm really satisfied. They always have an open ear for any improvements you might want or things that might not be quite right, although that hasn't happened so far. And no, it's not a new exchange that just popped up out of nowhere that you've never heard of. CoinEx is currently celebrating its 7-year anniversary, which means it's an exchange that has been around for a very long time and has proven sustainability. As a welcome bonus, you can snag up to $100. So if you want, the link is down in the video description where you can register. By doing that, you would be doing yourself a favor and of course supporting my channel a bit. Now let's take a look at this in a smaller time frame. Red box for larger wave 2, yellow for small wave ABC. We're building. Wave B needs a 5-part increase in wave 1, 2. We've built wave 3, correcting in wave 4, priced $30, $25, uncertain as we're in this price box. Will we rise into wave 5 or will wave B peak and sell off, lowering wave 4? And it seems we have built out wave 3 and are now in a correction in wave 4, which should have a price between $30 and $25. It's hard to say, so we've already entered this price box. Will we fully rise into wave 5 now, or will we see another peak in wave B and then sell off to take wave 4 lower? This would mean that with a direct entry we would have a wave A, B, C and are already moving up into wave 5. Are we going to fully rise into wave 5 now? Or will we peak in wave B and then sell off again to take wave 4 lower? This implies that with a direct entry, we have wave A, B, C, and are moving up into wave 5. Alternatively, we might have just completed wave A, rise into wave B briefly, and then sell off to lower wave 4. If that occurs, we shouldn't drop below 25.6 cents, as it would signal a direct sell-off. Or we might have just built out wave A here, go up again into wave B for a brief surge, and then sell off again to go lower into wave 4. And if that happens, we shouldn't sustainably drop below 25.6 cents, because that would be a strong signal that we should indeed start selling off directly. Let's stay bullish for now. If wave B is just that, the maximum price target is 51.9 cents. If we exceed this, it might still be wave B, but not a direct sell-off. Turning at A and dropping increases the chance of breaking below. If we count this as A and B rising, B could rise high and sell off again, reducing the risk of breaking below. This means that if we turn forward at the A here and run down, the probability that we will break through down here is very high. But if we manage to count this, where A and B run above, theoretically, B could also rise that high and then sell off again, which would mean the risk of breaking below here would no longer be present. But I recommend you subscribe to my channel because I'll keep you updated on that. And I've definitely decided for the new year, since I currently have more time, to upload videos more regularly so that you can stay up to date. I hope today's video had some exciting information for you. If that's the case, feel free to leave a thumbs up on the video, drop me a short comment, or maybe just a little smiley. That would help boost the algorithm and be great for the channel. And I want to point out that there's another exciting chart analysis waiting for you in the credits. I wish you all a great time until the next video, and goodbye.